On the program today, UN Food and Agricultural Organization warns of rising levels of acute hunger with potential risk of famine in 4 hotspots, including Nigeria. World Bank IMF annual meetings in Morocco postponed until 2022. Liberia and Morocco signed bilateral agreements to boost agriculture and health sectors. Good afternoon and welcome to Business Incorporated. I'm Chimeze Obi-Iwagu. Let's get the show started with intraday market numbers, which were mixed in Africa. South Africa's JSE index surged 1.55%, while investor sentiments in Nigeria were bearish as the index lost 0.48%. The EGX 30 in Egypt ended the week positive on Thursday by 0.69%. Kenya closed positive on Thursday. Well, let's turn our attention to the Middle Eastern markets, which ended the week positive on Thursday. The Qatari index posted the highest gain of 1.67%, while Saudi Arabia's market was marginally higher by 0.01%. In the UAE, Abu Dhabi's main index advanced 0.60%, while Dubai's index rose 0.32%. And in Europe, markets were mixed on Friday morning as investors await the outcome of the U.S. election and react to rising coronavirus cases and new restrictions across the continent. Well, earnings data are also on tap, and Conrad will fill us in. Good afternoon, Conrad. How are you doing today?
Well, Chimmy, you know the magic words. Thank God it's Friday. I'm okay, thank you, and I hope you are doing fine as well.
I'm doing great, and thank God it's Friday. Well, let's start from the data front. Germany's industrial output continues to be on the rise, but the latest data shows the recovery is also slowing down. Which side of the story are investors looking at? Is it the glass half year or half empty?
Well, you know, everything is struggling sort of here to keep or gain that half-full status. The 1.6% increase in industrial production in the month of September, that was about 1 percentage point below the average forecasts on the markets. And of course, what's now on everyone's minds here is, will this be enough to prevent our economy, the German economy in the fourth quarter, to perform negatively in the current quarter? As you know, we have a partial lockdown in the country. Cinemas are closed, gyms are closed, domestic travel has more or less come to a halt. So from the services sector, we should not expect a big contribution to GDP in the current quarter. We have to rely on our manufacturers, on the building companies, on the producers of basic materials, etc. The stock market here, as you see, is not taking a lot of inspiration from the data. The uncertainty is still there. The glass is in between half full and half empty. But if we take a look at the weekly performance of the German share index, it's been quite strong. The DAX so far this week has gained nearly 8%.
All right, let's look at the earnings front. A number of auto companies have come out with earnings reports. And for a change, not all is doom and gloom in the sector. On the contrary, tell us what's going on.
Well, sales in China are looking good again. This was reported already earlier this week by BMW. Now Honda and Toyota, the big car makers from Japan, they have both doubled their profit forecasts. And this has to do with strong sales in China, but also with strong sales in the United States, where over the summer months, obviously, many Americans went to the dealerships and, you know, not only looked at cars, but ordered new cars as well. Also, Ford and General Motors coming out with strong sales numbers. And even Daimler's CEO today came out with an evaluation of the current situation. He says, despite the rising corona cases, despite the partial lockdown here in Germany, he doesn't see the risk that Daimler has to lower its targets for 2020 again. Of course, it had lowered those targets before, not something that the markets have to get prepared for now. This, slight increase of optimism at several car makers for several of their markets does not mean, though, that the optimism is trickling down to the suppliers for the car sector today. Rheinmetall, which is a large German defense firm and also has a division that provides parts for car makers, says that in the third quarter and in the current business, defense is strong, but the auto supply division is really not out of the woods yet.
In the meantime, insurance and financial services giant Allianz has posted a surprise 6% rise in third quarter net profit despite pressure on business from the pandemic. Where's Allianz headed for the year?
Allianz doesn't say. They are not willing to give a full year forecast, which is, of course, worth mentioning as we only have a couple of weeks left in this year 2020. But Allianz is really having problems at several fronts. Everyone knows that selling life insurance policies these days is not easy because of the, low interest rate environment. But Allianz also, in the corona crisis, had a few cases in court where clients claimed that Allianz had to pay the damage that those clients had because of corona. Business clients that have an insurance policy against external risks to their business. They claim that corona was such a risk. Allianz said no, but Allianz lost the case. And of course, experts for the insurance sector are now wondering how big a problem this might become towards the end of the year, and whether this is behind the fact that Allianz is not willing to give out a full year forecast.
Right. Thank you, Conrad. Yes, thank God it's Friday. But don't forget, we'll still have the U.S. election to monitor. The counting is still on. The drama is still there. So let's continue to monitor that. And perhaps we'll have quite a lot to chew next week. Enjoy the rest of the day, Conrad. And after days of high electoral drama, global stock markets are on track for their best week in months. Britain's FTSE 100 has surged by 6% since Monday morning, the strongest rise since June as shares recover from last week's slump. Let's see how the day is going in London this Friday afternoon with Juliana. Hello, Juliana. Good afternoon. Well, let's start from other issues, not talking about the U.S. election now. Denmark has been taken off the UK's coronavirus travel corridor list. Passengers arriving in the UK from today will need to self-isolate for 14 days. This decision was taken overnight. Why? Why the urgent decision?
Yes, there was an urgent decision, another urgent decision, because it appears as if there have been a lot of short notices. But according to authorities in Denmark, a new mutated form of coronavirus was discovered in a mink farm. Mink are very small animals. I know a lot of viewers may be familiar with mink fur. So these animals are bred so wealthy individuals that like wearing these materials can look glamorous. They've had to close the farm, and in fact they've actually decided to cull 17 million of these animals because they are obtaining this coronavirus that can actually be passed on to humans. So the Transport Secretary overnight made a decision. I believe the announcement was made at 1:30 a.m. G, and at 4 G, if you arrived in the UK, then you have to self-isolate for 14 days. Not great. It hasn't just been Denmark. Earlier in the week, Germany and Sweden were also taken off this travel corridor list, which basically means there are no countries you can travel to at the moment, especially because we are in a lockdown anyway. So it's banned for anybody to try and leave Britain at the moment. There is a statement. Grant Shapps says, "I understand that this will be concerning for both people currently in Denmark and the wider UK public, which is why we've moved quickly to protect our country and prevent the spread of the virus to the UK." That's what Grant Shapps, the Transport Secretary, has said on this matter.
And on earnings, or rather corporate news there, RSA, the owner of the More Than Insurance brand, is in talks with to overseas insurers over a £7 billion deal, which could result in a takeover and breakup of one of the FTSE 100's oldest companies. If the deal goes ahead, what would it mean for the British insurer?
Well, what it means is that they would have made lots of money, and their shareholders are pretty happy because as soon as this announcement was made yesterday, their shares surged 46%, which really shows that they are indeed very happy about this potential takeover. There are two companies. One of them is called Intact, which is a Canadian insurance firm. The other is called Tryg, which is a Danish firm. Now, RSA was a merger of two insurance companies here in the UK, one of them being Royal Insurance and the other Sun Alliance. They were merged in 1996, and what they provide is personal insurance, home insurance and motor insurance. They've been doing pretty well. As you said, they are one of the oldest UK-listed companies here. The deal hasn't yet been confirmed. I believe the offer is still ongoing until about December the 3rd to make sure they tick all of the regulatory boxes. But it appears to be a good deal. Like I said, the shareholders are happy. Tryg, the Denmark company, will take over RSA's Swedish and Norwegian operations, whilst Intact, the Canadian company, will oversee the UK and the Canadian operations. And so it seems to be a win-win, but nothing has been sorted out at the moment. The deal, as you said, is valued at $9.2 billion.
And markets are still gripped by the US election. This, coupled with Brexit talk and COVID-19 lockdown, have made the week a busy one for business. Bring us up to speed with the state of the markets at the moment and, of course, outlook for next week.
It has been a busy week. That's an understatement, Chimaze. It's probably going to be a busy week for a weekend for all of us dragging into next week. The FTSE is actually in the red at the moment, and that's really because we've had some information from Halifax about house prices. Now, we know that we have seen a resurgence and a boom in the housing market activity. House prices at the moment are at record highs here in the UK, but the data that we've just received shows that in October, month on month, house prices only rose at 0.3%. Now, if you compare that to September, it rose by 1.5%, and in August and July, it rose by 1.7%. So as I had explained to you, and as economists and those who are in the sector had said, they did believe that that boom would quite significantly fall, and perhaps we are seeing the signs of the end of that housing market boom. House builders at the moment, they are the biggest fallers on the FTSE. So Barratt Housing, Taylor Wimpey, Vistry, they're all down between 1% and 4.5%. Just to have a quick look at the numbers, the all-share is down 0.24%, FTSE 100 is down 0.34%, and the FTSE 250 is down 0.33%. In currencies, the British pound is down against the US dollar by 0.01%, down against the euro by 0.31%, and down against the Japanese yen by 0.26%. It's worth saying, because I know we're all watching and waiting, that former Vice President Joe Biden has just overtaken US President Donald Trump in the state of Georgia. At the moment, I believe Joe Biden needs 6 electoral college votes to get over that all-important 270 mark. If he wins Georgia, he gets 16, which means he's completely over the line. We're all watching and waiting. We actually have Channels Business Global on at 4:30. Well, I will be analysing that with some of our contributors. So, of course, next week, Chimaze, we are all going to be watching and waiting for the outcome of the US election and all the political and legal upheaval that will come from it, and Brexit, because it does have an impact on Brexit. America's biggest ally is Britain. We know that Prime Minister Boris Johnson and the incumbent Donald Trump have a very, very strong relationship. The Biden administration is going to be completely different, and perhaps that will urge and push Brussels and the UK to once and for all sign this trade deal. So it's all up in the air, and there's all to play for. But of course, until the counting stops, the race is still on. So yes, next week, more US election and more Brexit talks.
Absolutely, Juliana. Well, we can say thank God it's Friday, but it's not a restful one, because we're not going to go to sleep until the finish that counting in the US. In the meantime, enjoy the weekend. Okay, we'll take a quick break, and when we come back, we'll continue with other stories, particularly on the African continent. Just stay with us. The United Nations Food and Agriculture Organization and the UN World Food Programme are warning of rising levels of acute hunger with potential risk of famine in 4 hotspots, which include Burkina Faso, northeastern Nigeria, South Sudan, and Yemen. The report describes a toxic combination of conflict, economic decline, climate extremes, and the COVID-19 pandemic that is driving people further into the emergency phase of food insecurity. Parts of the population in the 4 hotspots of highest concern are already experiencing a critical hunger situation, with a report warning that escalations in conflict, as well as a further reduction in humanitarian access, could lead to a risk of famine. But these 4 countries are far from being the only red flag on a world map that shows that acute food insecurity levels are reaching new highs globally. Another 16 countries are at high risk of rising levels of acute hunger. And the Kingdom of Morocco, the World Bank Group, and the International Monetary Fund have announced the postponement of the planned World Bank Group IMF annual meetings scheduled to take place in Marrakesh, Morocco in October 2021. The meeting is postponed by 12 months until 2022 due to the COVID-19 pandemic. The annual meetings are usually held for 2 consecutive years at the World Bank and IMF headquarters in Washington, D.C., and every 3rd year in another member country. The annual meetings bring together central bankers, ministers of finance and development, private sector executives, civil society, media, and academics to discuss issues of global concern, including the world economic outlook, global financial stability, poverty eradication, inclusive economic growth and job creation, climate change, and others. The last in-person meetings to be held outside Washington were in Bali, Indonesia in October 2018. The IMF has made $100 billion available for emergency lending to countries due to the global pandemic and has made loans to including more than 24 African nations. The World Bank plans $160 billion in assistance during a period of 15 months. All right, let's look at South Africa. The government during the week pledged to unlock 1 trillion rand for infrastructure projects over the next 4 years. The planned program announced by President Ramaphosa during a conference on the sideline of the South Africa infrastructure project is expected to revive the gloomy economy, which is expected to further decline by at least 8% this year. Let's bring in Trinity Nkube, an economic and policy analyst in South Africa, to talk to us about this. Hello, Trinity. Thank you very much for joining us. Good afternoon.
Good afternoon. Thank you for having me.
So 1 trillion rand for infrastructure projects. The government sees it, this strategy, an opportunity to not only give a new face to the country, but also generate jobs for the youth and promote local businesses, therefore lower the unemployment rate. How do you see that?
I think it's a step in the right direction. However, we've had similar, sort of projects, although at a much smaller scale. What I would say is, for us to have that idea, to have more impact, we would need to have the entire ecosystem, being consulted in the process. That is always the key that's missing, in my view, because at this point, if you have government and private sector as well as public sector coming through, working out these projects, the entrepreneur and some of the, innovation-driven enterprises and SMEs, they are left out of this conversation. And as we coach and train entrepreneurs, this is often the frustration, and these projects don't have the impact that they're supposed to have.
See the government raising this fund for the project, considering revenue squeeze that government had often complained about?
Absolutely. So again, as I was saying, when you look at government raising such amount of funds, that's great. However, it always comes down to the implementation. How do we get the the most bang out of the buck? So this trillion rand that you're talking about, are we really going to have the impact that it's supposed to have? I'll give you an example. during the COVID pandemic, we had 500 billion rand being unpacked. As we sit here, we're sitting with, a lot of issues of how that money was used. So I fear for the most again. So where we want to go back to, how are we actually going to get an impact from these projects? Because as we speak, there's also a lot of projects that were not finished. There are other projects that are not having a clear path where they're going. So as exciting as this is, there needs to be a clear path and having consultation with all the key stakeholders in this ecosystem.
Now, the central bank expects gross domestic product to shrink more than 8% this year. For you as an economic watcher, what is your expectations?
It's pretty much in line with what has been going on the ground. If you recall, a few months ago when the COVID-19 lockdown started, South Africa was already in trouble. We were in trouble with most of the rating agencies. We were already being downgraded. The investment outlook was not looking great. So yes, so it's really a tough road ahead, and we really need to change our culture in which we approach business. Hence, yes, that 8% is something that's expected. It could be worse. And this is where, again, I come back to the ecosystem. We need everybody on board, not, take other people out of the conversation when it comes to how can we get the most out of taxpayers' money and all these monies that are being raised so that we can have the youth involved, we can have the SMEs involved, we can have entrepreneurs involved. At the moment, I'm not so confident, no matter how much money we can raise, whether it's 3 million, 3 trillion or whatever, the climate and culture in which we are residing at this moment is not very conducive to get the most out of the bucks.
All right. Thank you very much, Mr. Trinity Nkube, for your time. Trinity Nkube is an economic and policy analyst in South Africa. And the government of Liberia and Morocco have signed 3 separate bilateral agreements aimed at establishing framework of cooperation in the areas of health, higher education and research, and of course agriculture. The agreement is in accordance with the existing laws of both countries and on the basis of equality and mutual benefits. The cooperation on agriculture, which runs for a 5-year period, mandates both countries to promote and facilitate collaboration in farm mechanization, animal health, including vet medicine, community health workers, subject matter specialists, as well as entrepreneur skills developments for small business enterprises. The Liberian-Moroccan Joint Technical Committee, comprising of members from the Ministry of Agriculture, Fisheries, Rural Development and Waters and Forests of the Kingdom of Morocco and Ministry of Agriculture in Liberia, will be established to execute the cooperation. And that's a wrap on the program for today and, of course, for the week. Thank you for being part of it. I'm Chimeze Obi Iwagu.